Today we're going to be talking about the needs of buyers. So you're a buyer, you've done all the work that you needed to do to find the right broker to work with, you've done all the work that you needed to do to find the right house to buy, and you've done all the work that you need to do to find the right bank to deal with. Today we're at the Sanford Institution for Savings to find out, when you go for that first bank appointment, what do you need, how do you bring that information to the bank so that they can help you. And our expert today is Kim Stewart. Welcome, Kim. Thank you.
Randall.
Tell us a little bit about what consumers need to know.
Well, Randall, when they prepare for their meeting with me for their mortgage loan application, I'm looking at 4 qualities for the borrower. We call it the 4 C's of credit. And we look at their capacity to repay the loan, we look at the collateral for the loan, we look at their character, and we look at their capital. And today we want to spend a little bit of time talking about the capital and their capacity.
Good. So all's ready. I've gone through my process. I'm ready to go to the bank. What do I need to bring? What do I need to have with me?
Well, in preparing my borrowers for their loan appointment, I generally send out or email a mortgage checklist of information that kind of gives them a list of data that I need to help me complete the loan application and get their loan approved so that we end up here at the closing table, which is our goal. The first one would be capital. That's how much money that they're going to be using for their down payment, their closing costs, inspections, purchasing their homeowner's insurance. So the way that we verify their capital is by requesting bank statements. Now, the guidelines say that you must have 2 months, consecutive months, most recent bank statements to show where the monies are on deposit that are going to be used to close this transaction. And I want to point out that it's very important that the borrowers do bring in their bank statements and not an online transaction history. There's a distinct difference between the two, where one of them doesn't contain enough information to meet the secondary market guidelines. So I would encourage them to get their bank statements, and if it says page 1 of 4, make sure we have all 4 pages.
And so we need bank statements, documentation. What else do we need to bring?
Well, the other part of it, and the huge part, is verifying what their income is that we're qualifying them for the loan on. So for most borrowers, I'm asking for the most recent 2 years W-2 forms and their most recent pay stubs to show what their current earning capacity has been and what they're earning now. And we kind of look to see that those are in line with each other. On the pay stubs, it depends on your pay frequency as to how much information I need you to bring. So if you're paid on a weekly basis, I need the most recent 4 pay stubs, and on a bi-weekly basis, 2 pay stubs.
And how about people like me who are self-employed? What do we bring?
You're out of luck, no. For folks like you, Randall, that are self-employed, we look at their most recent 2 years tax returns, their 1040s. And if those tax returns reveal to me that you have an ownership interest in a business and it's under a corporate entity, I may be requesting those as well. And the rule of thumb here on that one is if you have more than 25% ownership in the company, I will in fact ask for those corporate returns as well.
Very helpful, Kim. Thank you very much.
Thank you.
So as a homeowner, there is lots that you go through to get to this important time, whereas Kim said you want to get to this closing table. SIS, they're the place to come.